Hello, everyone. It'll take a second for everyone to come in, plus what'll probably be 50 AI note takers from everyone. I always wonder if we'll have more virtual attendees than human attendees on a meeting. Webinars that sometimes can hit both. If you haven't already, refill your coffee, your tea, grab a Diet Coke, or whatever your caffeinated beverage is for the morning, and we'll get started in about 30 seconds. See a few more popping in. All right. Hey, good morning, everyone. My name is Frank Chestalki, and I am your VP of Sales and Business Development here at AVO MedTech. I really appreciate you taking a little bit of time out of your morning, or if you're international, from your afternoon or evening to join us for this conversation. It's a topic that we hear a lot from our clients, from different entrepreneurs. I'm certain it is on your mind. And I'm hopeful that today we'll have a conversation that will give you a different way of thinking about your fundraising journey, maybe give you a new perspective, some new ideas, and help you be a little bit more successful. Never easy, but maybe a bit easier. A couple rules of the road for today. So once we get started in the conversation, I'll be running Q&A. If you have questions, anytime you want to ask them, throw them in the chat. Don't use the Q&A, use the chat. It's just easier to pull them up. Second, if you see me turning my head looking away, I'm not ignoring you or ignoring our speakers. I've got the questions in my notes off to the side on a second screen. And then third, the most common question we get asked is, can I get a recording? Yep, this is being recorded. And after the webinar is done, Microsoft does its little AI magic, and you'll get an email automatically with a link to the recording, with the notes, etc. Right? So you don't need to ask. And if you have your own AI note taker, you don't even need to use it if you don't want to. And with that, we're going to get started. I want to start first by having our two speakers just do a quick introduction on themselves and a little bit of their fundraising journey to set up the conversation. Morgan, maybe we could start with you. If you could just give us a bit of background on you and some of your fundraising journey.
Yeah, of course. So Morgan Evans, I am currently the founder and CEO of Agitated Solutions, which is a company doing several different innovations in ultrasound. My background in the fundraising journey is that I first co-founded my med device startup in business school. And I was 28 at the time and trying to go out and fundraise from angel investors, a company called Vicera Technologies. And it was very eye-opening for me, kind of getting out there, getting to know venture capitalists and also the landscape of how to go about it, who to talk to, even recognizing the difference of angel investors, i.e. high net worth individual versus venture capital, et cetera. So that's when I just kind of first started getting exposure to it. But I will say over this journey, I have become very passionate about the topic, not only because I think there's a lot of just wasted effort and time of ways people could do this better. But also that from an investor point of view, like not a lot of people looked like me in either gender or age from the investment side. And so I also have been passionate about how do we activate different types of folks that are joining and putting more money into the ecosystem and the table as well. So since then, I've co-founded several additional companies and fundraised either as a board member or as a founder, and from a variety of sources, including strategics, small venture capital, and then primarily from angel and high net worth. So pleasure to be here today.
Right on. Thank you. And Anna, same to you.
All right. Well, good morning or good afternoon or evening to all. My name is Anna Argo. I'm currently serving as the Chief Business Officer at Cytotherix, as well as our portfolio of companies, including Ponte Biosciences and Omnitherix. I am a co-founder of our subsidiary companies, including Ponte Biosciences, Omnitherix, and then Nova Vita Thera, which we exited in 2021. My fundraising journey is maybe a little bit different than Morgan's. It started off in My career right after I left college was in the nonprofit fundraising sector, so fundraising on the philanthropic side. I spent 10 years doing that. Most of that was at children's hospitals and clinics in Minnesota. So I came at fundraising for, obviously very mission-based organizations that, didn't have that financial ROI. And so working with the high net worth individuals and, different donor populations within the philanthropic industry was what really dipped my toe into fundraising. And then back in the 20 teens, I did business school and decided to transition onto the corporate side in early 2020 when I joined Cytotherics and helped to build this portfolio of companies here. We are a liver cell therapy based company, and it's a platform technology. And so we've raised a lot of money in our time. To date, we've raised about 42 million to date and are in the midst of a Series A to fund through clinical in our companies now. So excited to share some of my experience and how from the philanthropic side to the corporate side and how different ROI but mission really being central to everything that really drives the fundraising process.
Yeah, right on. And I appreciate both of you sharing. Like, it's a bit of a unique journey, which has also informed the learnings. I know you both have made lots of pitches and ones that have hit and not hit, and you've seen plenty of them as well. Um, are there things you commonly see that people seem to just get wrong in that first meeting or that first engagement with an investor? Like, thoughts from either of you,
I can chime in and just to get it
please?
started. So a couple thoughts. The first being, you're not going to get someone to commit to an investment on that first call. Like the goal of that meeting is to get the next meeting. And a lot of that is figuring out what are they interested in, what gets people excited, what might be the pain points that you could address. So that's kind of number one of just the approach to that. The second piece in particular is that you kind of have to be able to adjust your pitch both on the fly, but also like know going into it the type of audience and what they're going to want to dig into. And so Anna hit that briefly in her introduction of, is it mission, is it ROI? You can kind of do some of your research to get an idea as to where they may want to take it. As very basic examples, my company is in the non-invasive cardiology space. Well, if I'm talking to a cardiologist, I'm going to go immediately to clinical need, problem, talk about their echo lab and how that's directed, et cetera. If I'm talking to someone that has worked in the financial industry for however long, they may be more inclined to want to know numbers, and you're going to talk to it at a different level. People want to go to what they know best in terms of discussion and where they dig in. So the more you know where they're inclined to want to take the conversation, the better you can have the version of the deck, and then also kind of what level of the story you're giving them up front, as opposed to like, this is my pitch deck, this is how I do it, and exactly how I'm going to do every single meeting the exact same.
Oh yeah, right. And
Absolutely.
I hear a theme in there already of it's about the investor. You're asking for their money for your venture, but it's their money, so their story, what they need to hear. Anna, please.
Yeah, absolutely. I echo everything that Morgan just said. And, I think if you, look at the title of this conversation, what we're talking about from a, sales versus fundraising and how they're really the same thing in so many ways. When you go into a sales pitch, if you're, selling a shoe, you're not going to say right at the top, will you buy it? Right. They need to try it on. Does it fit? Is it comfortable? Is it, the type of shoe that they are looking for? Right. And this is a very silly example, I understand, but when you think about sales from the most basic level, that is what fundraising is. And so you need to treat it like you would any sales process or any cultivation of a relationship. And I think that's the other thing that founders get wrong a lot, is that they go in expecting a transaction to happen. And fundraising sales is not just transactional. And if you treat it that way, you will not be successful. It's building that relationship, understanding, as Morgan said, who these people are, what their needs are, what their timing is, how is their decision criteria coming together. And and you're understanding and almost diagnosing, is there alignment in what I'm selling or fundraising for with what they are investing in and buying? And if they're not looking at that without that clarity, the pitch is just way too premature to end up with a successful sale or investment.
Yeah. Anna, you talked about that like sales process part, and I suspect it was probably similar when you were in development.
Mhm.
When you're out doing fundraising, are you approaching it like upfront with, hey, here's a process I want to run, here's an approach I want to take? Like, how are you thinking about building that process?
Absolutely. It is a process. And I interestingly, I think that when we look at process and look at systems, a lot of failures in process and systems come from lack of that infrastructure and lack of that intention from the beginning. And so, when we look at a true sales process, you are starting with, who is your ideal investor? How do we define that? And how do we look for filling the pipeline of, a targeted list that is a real possibility versus, calling everyone who says they invest in med tech on their page, because med tech means many, many things to many different people. And then going through these clear stages of, identification and then qualification, I guess discovery goes before even identification and qualification in that process. And then moving through, what are their objections, and how can you answer those questions in a way that's meaningful to your pitch, your company, your need, while still honoring what they're looking for as well. And then knowing in that process at any point of time that there might be a point where you just say this isn't the right fit, on either side. And I think as a founder, it can be so exciting to hear that there is some interest and you get down the path. And if you actually are misaligned from your side too, you're interviewing them, you're qualifying them as much as they're qualifying you for that investment. So not missing that piece in that sales process. And then when you get to a commitment and close, knowing that that's not the end. And again, because this isn't a transaction. And so after a commitment and close, it's that continued, uh, you know, stewardship and investor relations, and that piece that, again, you don't want to forget and leave off the table, because there inevitably will be a time again down the road where you'll need to raise more money. And if it's a transaction and you go back to that person, in 2 years and say, I need more money, and they haven't had that relationship built in between, they're not going to be as likely to want to put more money into it.
Well, that is fantastic. Thank you. And Morgan, I might ask if same thing you talked a bit about your process or how you think about it. And maybe also Anna mentioned infrastructure.
Yeah.
I know there's some like tools and things you've used. Maybe talk about that as well.
Yeah, so you kind of heard Anna articulate the steps of a funnel high level. I would say I have similar ones, right? Where there's a lead, I've emailed them, I'm waiting to hear back, or I got a warm intro to them. I'm then awaiting a meeting. They're actively considering, are they committed, verbal commitment, close, et cetera. So there's those kind of pieces, but the tools to manage that, the first version of this, the very first time I ever did it, it was like an Excel spreadsheet, right? And everyone probably has some version of that, and you can change your column color or something like that and just manage accordingly. Um, I recently started using like a light CRM that integrates into G Suite, which is what our team uses, called Streak. And it does kind of auto reminders. You can set stages of a funnel. It literally looks like anyone that's done true sales would do something like that. What's nice about those types of tools is it can also remind you of the previous touch points, conversations. You sent this deck on that date, reminder to follow up in a week. Just the basics, because by the way, like us entrepreneurs, like we're also running a company during all of this. So it's not like all you're doing is focusing on, yes, I talked to this person a week ago, let me send a follow-up reminder. So I do think the process piece of how to keep the engine is good. The other kind of highlights I've had or realizations as a part of this journey, a no is not a forever no, it's a no for now. And if you think about sales in other spaces, right? Like if you were selling a med device product to a, surgeon, And the first time you went in, they were like, hey, I'm happy with what I have. Like, you probably wouldn't just say, I'm never going to call on them ever again. You would have a way to kind of re-engage, to talk about something different or new, or maybe you see them at a conference. But it's this nurturing of leads throughout. And how do you turn a no for now into a yes? Because to Anna's comment, even with existing investors, sure, because sometimes they bet small and they'll bet larger later. But even like sometimes people bet big early and then they don't follow on, in which case you're going to have to round out with other people later. So continuing to figure out how to keep people in that funnel engaged was kind of number one. The number two, which is funny, and again, if you ask salespeople, like these are kind of like 101 type concepts, but if there's a sales funnel and all I focus on is managing things that are in the funnel, eventually you run out of things in the funnel. And so, like, for me, the mindset of trying to constantly be adding new leads to my funnel is something that is like, it takes time and effort to figure out, well, where do I find more investors? How do I continue to get warm intros? How do I continue to get, new angel investors that I can meet and network with? And so I found, not dissimilar to like what a sales rep would do, putting some basic KPIs for myself around that, of not just I'm following up, I'm touching, I'm meeting, but I'm adding new things constantly to the input. That has been one of the hardest pieces, but is also, I think, really critical to long-term success of funding these.
Yeah, right on. And Anna, maybe if you could build on that last part there, the constant, I'll call it pipeline development.
Mhm.
How do you think about that, or just making sure there's always something new coming in?
Sure. Absolutely. And I'm honestly always amazed that I feel like I've just combed through every investor database, looked at PitchBook and Crunchbase and, all these resources that are available. And yet there's still new investors that show up that you've never heard of before. And which is exciting and it's important. And I think too, when I look at filling the pipeline, it's about being out and being present, in inside industry events, even if they're not specific to raising money. If that means it's a virtual event like we're having today, or an in-person type event, I think if you show up and you are engaged with the industry, that's one really great way to fill the pipeline. Additionally, it's forming relationships with other founders, like Morgan, and who do you know that may have not been a good fit for your raise but might be a good fit for mine. And I think if we can support one another as founders and as leaders in these companies, we'll all go further faster. A cell therapy biotech is very different than an ultrasound based company for cardio, right? And so we have very different needs from investors and different interests in investors. And so if we can, kind of share the wealth, then, make warm introductions for one another as founders, I think that's another great way to build the pipeline. And shows that we're all, working towards something greater than just ourselves or our business that we're trying to build.
Yeah, if I could build off of that really quickly, 100% agree, because it's also super lonely, like being an entrepreneur. So even just the like, I'm gonna bring Anna for a glass of wine, like who else should I be talking to? And candidly sharing some of the people you shouldn't talk to. Like when you talked about qualifying leads, on both sides, like there are some investors that probably shouldn't, like people don't want them on their cap table if they could avoid it at all cost. That is helpful to share as well. And then I think in terms of that, just constantly building, not only with each other that may not be a fit for my company, but someone else, but also with investors, of saying, if not you, then who? Because they often
Yes.
know the landscape of who's in different spaces. And then if they are an investor, who else have you syndicated with before? Are you willing to make a introduction? Again, warm intro always being better than a cold. Oh, and by the way, like, can you help share any diligence with someone else that's interested? Some investors have mixed emotions on that, but just whatever you can do to try to get people on that journey faster is always going to be beneficial to everyone.
I would imagine in the case of connecting with other founders, asking for those warm intros, that the relational versus transactional also applies. Fair?
Yes.
Yeah. So
100%.
yeah.
Yes.
So incumbent on entrepreneurs to network in general, but with good intent and to contribute both ways, not just peel off a bunch of intro skip town.
Mhm.
If you're gonna receive, you got to give some too.
Yes.
Yeah.
And I think too, just that integrity piece of, being someone that is worthy of that introduction, right? And that's the give and take, because if Morgan is going to introduce an investor she knows to me, she wants to know that I am going to, cultivate that in a very, you know, pay that I'm going to pay attention and, follow
Mhm.
through and, be professional about it. That's the word I was looking for. Because that will ultimately reflect back to her. And I think having that integrity and that relational give and take is really important, that you also are following through and being a good steward of those introductions. Because if you drop one, Morgan's not going to introduce me to another person, right? Because it will reflect badly on her. So just kind of remembering that cycle is so important, and it's something that needs to be considered.
I think I'm hearing like second big theme is relational, which really ties into the first theme that I heard of it's about them, not just you, right? In this case, if you're connecting with other founders seeking their help, right, they need to know and trust you'll do good by that and that you'll also contribute to the greater good. Looks like we got a question from Mario. Let me just look at this real quick. You both mentioned building relationships is critical in a long game play. Are these investor relationships only formable once you're the founder with a real pitch or need? Or do you think there are things someone earlier in their career or in their journey can do to warm investor relationships, say build the network before it's needed? Anna, Morgan, thoughts there?
Short answer is yes. You don't want to start building the relationship the minute you need the money, right? Because then you'll rush through the steps, you'll try to take shortcuts because you need it now. So absolutely, Mario, I think you do need to start building those relationships as soon as possible, and asking for those warm introductions even before there is a need, because if you can have those and keep people updated on progress and developments, and as you lead towards your next fundraising round, then when that comes, you're not starting from zero, but you're starting from a warm place already with that investor. So the sooner you can get started, the better.
And a couple things I would add on it too is that, you know, not every company should be funded. Like, let's also start with that as a premise, that there's a lot of ideas. Some are excellent, some are not. And if I'm going to go and risk a lot as an entrepreneur, I really want to make sure that my company is one of the ones that should, in fact, be funded. And I hope that I know those things before I left a paying job or, something like that. Right. And so if you think about, there's some period in which you can build those long-term relationships, but you can also pressure test assumptions before it's a real ask. So sometimes even just pitching without a pitch deck and just asking for advice. You're not asking for money. Here's how I'm thinking about it. Here's the market. Here's what I've done. Here's the questions I've asked. What else should I be thinking about? Starting in that lens can also like help refine your pitch even before you have one, build that relationship as we've all talked about, the long-term game, but also sometimes tell you when you might not be asking the right questions and where else to be seeking input. um and I think we all can relate to this saying of, like, if you ask for advice you can get money, but if you ask for money you get advice, right? And so if you are starting with the advice column truly, and that's what you're looking for, a lot of these investors are betting on the founder almost as much as the idea. And so showing that you're willing to ask for that early, and that you're open, you're coachable, that you're really trying to find someone that tells you your baby is ugly up front is actually, I think, a good quality to show as a leader, later when you're ready for it.
That last comment there, Morgan, makes me think you'd mentioned earlier that it can be a very lonely journey. And I would have to think with how hard all of the stuff in a startup is, including the fundraising, there's a level of resiliency these founders need to have. Any thoughts from you? And then Anna, that's the same as far as like how do you just maintain in the face of you're knocking on a lot of doors, probably getting turned down a bunch, and I mean you can see the bank account, right? Like it's a real thing. How do you like maintain that resiliency?
Yeah, I wouldn't say it's easy, but the thing that's helpful to remember is that if I'm and by the way, there's different comments on venture capital versus angel investor, but premise being very similar, which is VCs will share data that they've screened, say 200 deals to make one investment, right? Well, that meant they said 199 no's. And so if you just think of a numbers game as an like as a company, you're going to hear no disproportionately by far than to yes. And I think that the resiliency piece comes to when are you hearing consistent rationale for no? When is it just sometimes the venture fund, you're too early, you're too late. That has nothing to do with you. That's just the stage. And that's their investment thesis. And I think it's being able to not let that, like to filter the information that you should hear from the ones that's just, let me put it aside on to the next. And I think that's where the more you've pressure tested what it is up front and really like don't only ask friends with leading questions, like genuinely ask and try to like get the tough information up front so that when you get this later, you know that that may not be accurate, or hey, they're just busy and they haven't dug in enough to fully get it, or this doesn't fit their thesis. All of those things are okay. And then also to Frank's point, like be willing to have the network that you can bounce off to help you then say, no, you've got this, like double down around you to make sure that you're listening to the right voices throughout that journey too.
Right
Yeah.
on. Anna, thoughts?
Yeah, I was, similarly going to say, you really do have to be okay with being told no a lot and not taking it personally. And I learned this first in, the nonprofit side of fundraising. And I was young and, starry-eyed and was going to save the world. So, when I heard no, I was like, how can you not want to support these kids, right? But at the same time, it's as Morgan said previously too, no doesn't mean no forever. It means no right now. And unless there's something very black and white about their no, for example, this investor only invests in clean tech technology and you're trying to sell them on biotech, that's probably not going to be a fit. And also, you shouldn't reach out to them in the first place. And so, just understanding it's nothing personal. Ask for feedback where you can. I've found that funds aren't super giving with feedback on why it's not a fit, but where you can have that relationship first, I think that leads to a more transparent feedback from those investors so that you do know, is this fundable? Is this project something that we can get the right momentum behind and just keep pushing forward and knowing that if you believe in what you're doing and you can find the people who believe with you, it's all going to work out. And it's sometimes the days are hard and the bank account is low, and I just think there has to be a lot of hope. And I think entrepreneurs do this because they're a little crazy, right? Because it's just not an easy road.
And just a
Right
point that you
on.
mentioned that we should quickly highlight because it's an important one. There's also a fair amount of like have high quality shots on goal versus volume of
Mhm.
shots on goal, because that will also help the ratio of yes or no. And, to Anna's point of knowing kind of what stage they invest in. For example, if I pitch somebody that's minimum check size is 20 million and I'm doing a $5 million round, like that's a no I didn't need to hear. You know what I mean? If I had done my homework up front. And so I think that can sometimes be
Mhm.
helpful just in terms of context setting and saving yourself some pain and time, and their time too for later.
Yeah, I'm going to break the fourth wall for a moment here on that point that you both made. The number of times people reach out asking for intros where they clearly have not researched the group they're asking about. Now you're just damaging your reputation, right? Like you've told whoever you're reaching out to that you don't value their time and network enough to show the respect of like, hey, this is actually relevant. That preparatory work is so important. We had a couple more questions come in the chat, and folks, keep them coming. Thank you. I'm going to pull in Amy's for a moment, but Amy, I'm going to rephrase it just a little bit because I think it tied into something Morgan and Anna said a few minutes ago. So her question is essentially like, how early is too early to start talking to the investors? In her case, I would call it almost proto company formation. It sounds like that can be okay if you're clear on your goals. Morgan, thoughts?
I think okay, but also, you only get one chance to make a first impression. So on the one hand, I think it's helpful to build the relationship, have them get to know you, but you want to make sure you have enough meat on the bone that you don't look unprofessional in that initial presentation. So for example, if I was, initial meeting and they're like, well, what's your market size? And I have no idea. Or they ask me, what's your thought on regulatory path? And it's okay to not have all these answers, right? Like reg path, I can say, well, we still might be a de novo or a 510K. We have a pre-sub planned. We should know this answer by that date. But either way, we don't think we need much clinical trials work prior to, clearance. Like those are still okay answers that show that I'm thinking about it, even if I'm earlier in that process versus if I'm like, well, I don't know, actually, I have no idea what the reg process is. Like that might present a little bit in a way that doesn't position you for success later. So early is still okay. Just make sure that there's enough content and that you're showing that you're thinking about things correctly, even if you haven't taken all the right steps yet.
Yeah, and I'll just build on that. And, I know this kind of goes along with one of the questions Frank posed to us, in the preparation of this. But if you are clear on your mission and your goal as you're building this company, even if you're not ready to bring that money in, you can make very targeted outreach and focus your pipeline from a very early stage. But again, you need to clearly articulate why this investor is relevant to what you are building, and build the relationship not with the ask at the front, but as Morgan said, the advice versus money, asking for advice, you get money, asking for money, you get advice. I think that's another thing here is get the right people around you early so that you can ask for advice along the way. And if you can focus that pipeline of people you're asking advice from, then they'll naturally come along the journey with you and, can be supportive in your build up to what that ask might be. But again, you'll need a very clear and articulate why for your company before you should start doing that. Because if it's just a back of the napkin, I might do this and we might go that direction or that direction, you don't want to, as Morgan said, make a bad first impression.
And really quickly, like look yourself hard in the mirror and just acknowledge where someone else might perceive, a gap in your knowledge base or background.
Mm-hmm.
So for example, Amy's example was academic teams, right? Well, if I've been in academia, they're going to think I know my thing really, really well. What they probably are going to immediately go to is, do they know how to build a company? Do they know how to build a med device company? Do they understand regulation, right? The easiest way to get around those things is, can you find a advisor, a board member, a co-founder, something like that to bring to the table early on to help provide that credibility and to provide the guidance. So it's not just externally facing, like you actually want to hear what they have to say, because then you've kind of better positioned that whole situation up front to then make it a better and easier ask for the dollars later.
Right on. And I think both of you sort of answered is there a bad time to raise funds? And it sounds like one answer might be if you're not prepared, if you're not being targeted, that'd be a bad time. But any other thoughts as far as like, are there bad times to try and raise?
Right before a massive inflection point. So,
Yep. Wait till it's done.
yeah. So, in general, like just bridge rounds happen for a reason. So I don't want to sit there and say that doesn't happen. It does. And, as long as you've got investors around the table that understand the journey, that sometimes the trial takes longer than you think it will, or the development you thought was 6 months is now 9. number one, prepare for that with having buffer of all, of course, but also like give yourself and what that next thing is that you're trying to do, because it's kind of hard sometimes when you go and you want to, especially if you're going to ask for changes in valuation, right? Hey, it's been a year since I fundraised, but I'm still doing verification validation testing. Well, you really haven't shown anything from the investor's point of view to justify anything different. So just thinking through where those inflections are so that your raises align well with that, I think is something to keep in mind too.
And maybe the only thing I'll add, hold on, I feel like I'm echoing. Maybe just me. Okay. The only thing I'll add to that is there's maybe harder times to raise too. Like if you're down to $20 in your account and you need money today, that you don't have a lot of leverage in the conversation, right? Because you need the money now, and so you might not have the the price or the terms that you are looking for because you maybe waited too long. So so I would say that is a worse time to raise. Obviously you need the money, so you need to raise, but if you can get ahead of it and continue cultivating those relationships along the life cycle of need, then you won't get into a sticky situation where it's, now or never, do or die type of situation where you have to give a lot more than you might have to in other points in the process.
Mm-hmm.
That might be a third theme I'd pull out of this is almost like the life cycle of the company and the fundraising. It's not just a discrete or transactional activity. It's a thing you're doing all the way through, and the decisions you make along the way have implications for what's next. See, there was another question. Celine, I'm going to skip the fundraising trends, or is there a slowdown? That is a question we could cover for hours and hours and hours and have big debates on. So maybe if you want to talk about that one specifically, please reach out. But that is a deep cut of a question. One more from Amy asking about does previous funding through grants or other awards hold any value? And I'll say this comes up a lot from especially academic spinouts. If you've had grant funding, if you've had business plan prize money, does that create any extra leverage in the fundraising process?
I would say yes and no. And the yes is that in theory, you would have been able to burn down risk with those dollars in a way that is different. And so that part is great. And but if you remember, like an investor coming in is brand new to the table. So they're always going to be like, what's in it for me? Which the hope is that if you as a founder got a bunch of non-dilutive dollars, you probably have not, by definition, been diluted as much in your cap table. So therefore, maybe you are willing to have a more reasonable expectation of evaluation. That would be attractive to a new investor, right? Because now, hey, like, this is something that's not obscenely priced. Therefore, like I can come in and, it's good for the founder. They retain more equity, good for the investor because they're getting more for the dollar they're putting in. That's a great scenario. But if you raised all of those things, if you did that and then expected a ridiculous valuation at the end of it, well, I'm still looking at it as a one-off investment of being like, well, does this financially make sense? Yes, no. Now, all that said, if there's non-dilutive funding coming after, so let's say that you're planning to get money, you're raising at certain terms, you probably would have had 5 million, but you only have to raise 2 million. I'm making all this up. That's attractive to an investor coming in because you just have to raise less forward looking. And therefore, I am getting diluted less as an investor. So this all comes back to investors want return on investment in addition to mission. So how does those non-dilutive dollars translate to an investor actually getting a benefit from it as well, not just you founder being less diluted at the end of it?
And I'll just add to that, the other piece that I think it can signal to investors is almost a de-risking if that this was validated by the NIH or by the AVO MedTech competition at MedTech MVP or whatever that might be, you just can show, this is compelling, this is validated, this is a need in the market, and others have agreed with that. It's not just me going out with no validation, no market feedback, and saying, please invest in this thing that no one knows about yet. So I think that is a positive. But I don't think it's necessary. If you do not have non-dilutive funding, that doesn't mean you're dead in the water. It's just a nice to have, not a need to have.
It's a great question on leverage of like, what does leverage mean as far as a startup company going in to raise money? Like what is leverage?
I think I said that word. So leverage, and from the perspective I was coming in with, if you're struggling to meet payroll for your small team, you just lose leverage, right? Because you need money. And so I think that's why there's so much importance, and why you should think about fundraising for a longer runway than just a year at a time, or 2 years at a time even. And so the leverage piece is probably more relevant in my mind, at least, when it's a negative for the founder versus the investor. Because it's hard to leverage in a positive way, I think, as a founder, because you're building something compelling. There's a market need, but there's a lot of market needs. And there's a lot of compelling technologies that are coming to the market today, and that are needing funds to progress through the regulatory path. And so the leverage piece I see more as a negative than a positive. And I don't know, and maybe Morgan can think about this more intelligently than I, how you can leverage things more positively for your company in the fundraising process.
Yeah, maybe answered a little bit differently, but investors are a bit like lemmings sometimes, in that there is legitimate groupthink that happens.
Yes.
And therefore momentum is like a big piece of that. So like the fear of missing out, or, oh, this person's in, I want to be in too. Like you can actually take good milestone type things, or show interest from particular people, and use that as a way to kind of get others more excited, or to move faster. Like it's a lot easier to get your last check-in than your first check-in, right? Inherently. And so I think just thinking through ways to use and show momentum, and also progress, right? I mean, in general, that's a good thing for us to be doing, and then keeping that in mind with the timelines that you mentioned. So I don't know if that directly answers it, but.
That makes a lot of sense. I mean, in sales, it's often the saying, like nothing wins like winning, right? Like streaks are a thing, and that momentum can carry through. Another great question, this time from Natalie, asking about terms. And so we're kind of now further down in the process. You're negotiating with an investor, and she's asking, do you go in with expectations of the terms you want to get as a company, or talk a bit about that process? And Morgan, maybe if you'd start.
Yeah, so there's the kind of ideal way this would go, and there's the like, let's all be realistic, as capital environments have changed, how things can also go. But typically, you probably have an idea of what is market for what you would like to price, or the structure of a round, right? Like with convertible debt, for example, 8% interest, 20% discount is pretty common. And then you can do something besides that, but you got to be able to justify why it's higher or lower as a result, right? Actually pricing around, so equity, or a valuation cap, or something like that, is the piece that gets a little bit harder on some of the structure. So knowing what market is going into those conversations is really important. Knowing kind of what you would or wouldn't accept. And by the way, this is where advisors, board, etc., like board will have to authorize the round and the valuation of things. So you don't get to set those independent anyway. So just a reminder there on governance. But in a typical environment, you're talking, the goal would be to get people that are interested, but you typically would have a lead investor. The lead investor then is the one that usually would help negotiate and set those terms. of which once they're in, terms are set, deal docs are all done. The other people basically opt in, opt out with those same things. Now, there's sometimes side letters, for example, which, if I'm a really big investor as well, maybe I want a board observer. Those are the things that can be a little bit nuanced, but that would kind of be the ideal state of how a round is done, which is why you hear a lot of people asking about who leads a round versus who syndicates, and that being important to know going into all of this so that you can kind of structure yourself for success from the beginning. Otherwise, you find yourself in this like, oh, well, let us know when you have a lead. Let us know when you have a lead. And then you've got like 10 people that write $1 million check and you're trying to raise 10 million, all of which waiting for a lead. So that's kind of like the one piece of it. The practical thing, which to one of the questions earlier of just like, how has this changed? The company can still set terms. The board could agree on it and say, here's the price, here's the round, here are the like key elements of this. You're either in or you're out. You kind of opt in, opt out from there. There's risk from an inside price round, but it's typically if you're not being in line with expectation of market. And if anything, you would want an inside round to be, favorable to investor. Like you don't want to be too aggressive in those circumstances because there's a reason that the company is pricing it in the first place. So there is an avenue to do that, in which case then you kind of go to people, this is what the terms are. And unless there's a check that's big enough to make you want to open that up again, it is what it is, and you're in or out at those terms because you can't independently negotiate 10 times. It's just that's not going to happen.
And what I'll add to this is, from the standpoint, we're raising our Series A right now. And before we went out with the A, we did a ton of research on the market, right? And of course, the market in the last 2 years has been very different than the market in, the early 2020s. And so you just have to take all of that into consideration and go into it knowing, you're hoping it will be an up round or a flat round if it's a challenging environment, to the other question that we won't go too far into. But, there might just be some reality checks of it might be a down round. And, what's more important is getting the money in and moving it forward, or the, exact final terms. And I think it just, the reality is everyone is going to give a little bit in that negotiation, especially if there is a lead investor. You can have your kind of ideal target, but they'll come back with their own, research and justification as to why it should be something different. And, I think there's so many different things within a term sheet and within, the definitive agreements that, levers you can pull. And I think you just need to go in knowing, what are your kind of thresholds for things. And, if there's something that you really want to, die on a hill for, then pick that one thing, and then know that you might have to give on some other things. But if it's based in, reality of the market and, what activity has been done, you're probably going to end up in a relative place to where you start, if you're not going in with unrealistic expectations.
Mm-hmm.
Right on. So maybe one last question, and I'm just thinking about, on the call, we got a number of people who probably are raising right now or will be sometime this year. What would you recommend to them? I'll ask both of you this, that they do right now, or let's say over Q1, to just be better prepared when they go to market with their raise?
Yeah, I would say, and again, back to our sales example, let's say I'm selling a med device product. Well, I don't wait until I have FDA approval to build my pipeline, to set up my process, to set up my systems, to then go and sell, right? And so from that perspective, I would say build the process in the system, whether that's an Excel sheet, a CRM, some version of it. Start building the leads and researching them. So you heard that several times on this. You should know going into it based on the round that you're raising, if it's an angel round, or if it's a venture capital round, what are my milestones? And then what are the people that play in these spaces? And then I would just sit there and start trying to build up the muscle of meetings, outreach, warm introduction, finding more leads. So then you actually have something to start managing through that funnel. But put in the blocking and tackling up front and then start working ahead wherever you can.
Yeah, build the investor pipeline first and foremost. Relationship build, pressure test your story. Morgan said this earlier, is this something that you can get real honest feedback from people? Is this an investable asset? Is this something that I can go out and be successful in? And then define clear value milestones. What will this money do? Whether it's $2 million or $10 million or $100 million, you need to go into it saying, these are the things that these investments will do for the company, and just be very disciplined about that. You can change your approach to the pitch based on who you're in front of. And again, that was something Morgan said right at the beginning. You don't want to send the same email or do the exact same pitch to every single investor, because every single investor has something slightly different from one another, even if they're investing in the same space. So really be disciplined about being personalized and specific, and go out there knowing that if you will advance to the next conversation if that is your goal, right? To go in and get another conversation. It's just like dating. You go into the date looking for a next date. And so that's the same thing. You're just building that relationship, and then you hopefully are getting to a place where you can have a relationship that moves together from there.
Well said. Thank you. Anna, Morgan, thank you both. Really great conversation, really great discussion. Audience members, thank you for the questions and thank you for the time. We know this is very hard and we appreciate that you're doing work that matters. If we can ever help you out, please do reach out. We're always glad to help make connections, share info, share best practices. And again, reminder, when the event is done, you'll get the recording, it'll get emailed to you automatically. If you happen not to get it, reach out to me and we'll get you tracked down. Until then, enjoy the rest of your day, and thank you for joining AVO MedTech on this webinar. Have a great day.
Thank you.
Thanks.